Good afternoon again, everyone. Thank you for having me a second time. So, talking about new costing features, we have made significant improvements to iDempiere's costing functionality. We were working with Hengsin and with Hengsin's team to work on these problems, and they have delivered very well. And these improvements, they will be available from release 11 and release 12. So there is a bit of a, there's a bit of a roadmap there. So in 10, you don't see any of these improvements starting from 11 and then to 12. So just to be clear, what is covered by costing improvements? So as you know, when we talk about costing, there are two main methods. One is moving average, and the other one is standard costing. So standard costing is not part of this, because standard costing we normally use for manufactured products. So when you manufacture a product, you usually have a bill of material, you cost each production step and each BOM item separately, and you come up with a standard price. So this is standard pricing is mostly used in manufacturing. Yes, some people or some organizations, they use standard costing also for procured items, but I think it's rather the exception here. And standard costing is by nature much simpler, right? Because you're locking in your costs, and then everything that happens with a product is valuated at the standard price. So it's a rather static and easy method to use. So today we're only talking about moving average costing. And I think it's important to understand what costing actually means in the context of purchasing items and receiving them into stock at a certain cost value. So there are definitions in our international accounting standards. So IFRS and IAS, for example, they state that the cost of inventories includes all costs of purchase. So that's the product price, basically. But you also have to add anything related to bringing that product to your doorsteps, right? So it means if you import a product, it's customs duties, it's insurance expenses, it's clearing expenses, it's temporary storage facilities, transport, of course. All these things need to be itemized and eventually flow into the cost of the product, because this is what the product really costed you as a procuring entity, right? So it's not just the product cost, it's also what we call landed costs, right? Landed costs are the costs in addition to the product cost to bring it into your organization. Okay, and I mention here IFRS and IAS because most of you are European here, but in the Americans would talk about US GAAP, but the US GAAP has a very similar definition of what are the costs, how the costs have to be established for your inventory that you purchase. Okay, so why is costing really critical and important? It's important because it directly impacts your financial statements. So when you look into your balance sheet, you have here your assets, you have your liabilities and your equity, right? In your assets you have your current assets, and inside your current assets you have receivables, but then you have inventory there. And inventory is a balance sheet position that comprises the products you have in stock. And they need to be valued adequately and correctly, because otherwise you're misstating your balance sheet. So costs are impacting your balance sheet, but also your P&L. So when we talk about the P&L, every time you sell a product and you ship it, so when you sell it, basically you issue an invoice, you recognize revenue, right? And when you ship the product, you're recognizing your cost of goods sold, and that means we are crediting, a little bit accounting, crediting our inventory, and we are debiting the P&L on cost of goods sold, right? Now imagine that your cost basis in your inventory is incorrect. It's distorted for whatever reason. Then your cost of goods sold is wrong. And if your cost of goods sold is wrong, your margin is wrong. And then basically you are in trouble because you are misstating your P&L, but you're also giving your internal organization the wrong idea about the profitability of an order because the costs are not correct, either overstated or understated. So, and also it could lead to pricing errors, because if the cost is just shown too high, you would price the product too high and you will lose out on sales. So there's a lot of implications here, and this one is about really the margins, right? So I mentioned it earlier. Revenue minus your cost of goods sold is the gross profit, and the gross margin is that amount expressed in a percentage. And if your cost of goods sold is misstated, then you also have a problem here, right, with your margins. Now, if you misstate your costs, that has further implications, internal implications and external implications. So the internal exposure could be that, incorrect cost data can lead to poor strategic choices. If you don't accurately record your costs, you make wrong pricing decisions, you're overpricing products or you're underpricing products, and you don't operate, you're not functioning properly, your company doesn't function properly. It will also screw up your budget and your forecasts because you're working based on the wrong assumptions, what your costs are, right? And another issue is, of course, how did I do that?
It takes some time.
Give it some time? Okay. How much time? Right, so if your costing is not reliable, you're exposing also, some departments to internal scrutiny, and other departments will say, well, your data is not reliable, so it creates all kinds of internal frictions in the organization. So that's why we have to try to improve our costing information. And then, of course, we have external exposures. What does that mean? If, for example, the tax department or revenue department is recorded in Thailand, they find out that your cost basis is not correct, they can easily come in and say, hey, your tax basis is actually not correct because your costing is not accurate, and that has an impact also on your income taxes that you're paying, right? So that can lead to legal penalties, additional audits, more scrutiny from outside, fines, and so forth. But here also, if you are a publicly traded company, I don't think we have publicly traded companies here, but if you would be a publicly traded company, you would expose yourself also to scrutiny from, from the SEC and from other governing bodies. And then you have, of course, your supply and customer relations, which might get, irritated because of wrong costing information. So internal and external exposures you're facing here. Right, so what are these new features that we have introduced from release 11 and release 12? So we are the proud sponsor of all those, sponsored by Zurich Industrial. So there are basically 3 improvements that we have implemented. The first one is that costing data is now maintained, stored, recorded with account date. Now, as you know, up to release 10, costing data is only recorded by system date. That's no good, because if you do that, you have no way of reconciling your costing data with your general ledger. Your general ledger is always account-based. You have account dates, you have periods. But system dates are very different. That's just now, right? And if you have that situation that your subledger, which is your costing data, works with a different set of dates, you have no way of reconciling that with your general ledger, right? And so we introduced, with the help, of course, of Heng Sin and his team, the recording of costing data by account date, okay? So now you can go in and say, what is the costing data up to this date, right? You can take your product quantity, multiply it with the cost for that product, and that should match with your inventory balance for that particular account date and that particular product, okay? That's a very important link, that the sub-ledger can be reconciled against the general ledger. Otherwise, every auditor will ask you, okay, now you give me this balance sheet, I see here my inventory, right? Okay, let's take this product. How did you get to that amount? Now, if you go to your sub-ledger and you don't have an account date, how are you going to reconcile that? You need to start adding back things, and you need to do a lot of additional work to reconstruct the information. And I think the auditors would get very suspicious, right, at this point, that the system doesn't properly support that requirement. Now, point number 2, I think there was a strong drive from, you guessed it, Mr. Norbert Beder here, to do backdated costing. Backdated costing means that I give you an example. So let's say we have 2 accounting periods, right? We have accounting period May and we have accounting period June. And accounting period June is already open, right? And we perform a material receipt in May, right? So we are updating our quantities. And then in June, I will be doing some more material receipts, right? Adding to my quantity. But then I get in June, too late perhaps, my landed cost invoice. So it's an invoice that should have been recorded in accounting period May, but it wasn't available at that point. So we want to backdate that. This is just a simple example. So what would happen then now is that in the past the system didn't allow for that. Now, what is this? Did I touch something again? That's my VPN client. So the system now allows us to backdate transactions, and it also means that the system will recalculate the cost from that backdated date forward, and it will make also some adjustment postings if there have already been, for example, shipments going out for this product. So because this landed cost invoice will impact your cost basis in May, any shipment that came in June would have been impacted by that change. The system automatically makes these adjustment postings now. And this is, of course, very, very powerful and useful, right? And then number 3, stock coverage check. So this is, what does stock coverage mean? So let's say, for example, I receive a quantity of 100 of a certain product, right? And I have not received my landed cost invoice yet. I should have received it, but I haven't received it yet. And then I ship a quantity of 99 to the customer. So I have only 1 item left on stock. Then I get my landed cost invoice. And all these costs in there, like freight charges, insurance, everything in there actually relates to the quantity of 100. But I only have 1 on stock now. So up to release 10, what happens is that all these costs, the total amount, is thrown into the inventory balance based on 1. And that means that the cost in the system is totally overstated, right? Because that landed cost was supposed to be covering 100 pieces, but now it's all thrown into the 1 remaining piece. That means that this 1 piece will be very, very expensive costing-wise, and the next order, the next customer order that sells this product to the business partner will be totally overcosted, right? And the margins will be totally off. So stock coverage is a mechanism. Look at this. It's now, I lost my VPN connection now. maybe the signal here. Because the Wi-Fi is really, really weak here in this spot. I need the VPN because I need to then connect to iDempiere, which is behind the VPN firewall. Look at this. Okay, let me finish the presentation first. When I come to iDempiere, I try to connect again. So stock coverage is a mechanism that checks how much is left, right, of the material receipt quantity to which the landed cost refers to, and prorates the amount, splits it up and says, okay, because there's only one left, I can only take 1/100th of that cost and put it back into inventory and into cost, and the rest goes into the P&L. Because the 99 have already been sold, so that the cost related to the 99 pieces should go into the P&L, and gives me it doesn't give me a cost of goods sold, the amount on a cost of goods sold basis, but at least it's correct on a P&L level, right? And this is what stock coverage does. And here are the different iDempiere tickets backing these three changes here. So we have the 6203, and then we have the 3040 here. And as I said, Heng-Sin and Elaine were working on this one, and they delivered a really good solution here. So going into the detail here again. So from iDempiere 12, product costs are now recorded by account date. And that means that the product cost window and this subtab cost details looks like this now. It's not very well readable, I think, but this says account date here. All right, so you see here the account date. So before there was no account date, there was only a system date. It's no good, right? So now we have an account date. And like I mentioned before, the account date allows us to reconcile the costing subledger with our general ledger. And ultimately, I need to be able to do that anytime. That I need to be able to take a product, the quantity on stock times the cost, as of an account date, and I should be able to reconcile that with the stock value, with the inventory value of that product in the general ledger, anytime. They always have to match. Yeah? Okay, now stock coverage, that's not something I came up with, I have to be honest. It's a concept I borrowed from SAP. So SAP does exactly the same what I just explained. So for example, you have a stock of 100, you have a PO, and then you receive another 100, so you update your stock to 200. But then you have a withdrawal for some reason, a sale or a write-off, whatever, of 120, which leaves you at 80. So what happens then if you receive an invoice which has a price variance, right? The system will then prorate it and say, okay, this price variance should be allocated to the product, but it should be split into an amount which goes into inventory, and the other part should go into the P&L as a write-off because these products are no longer there, right? So in this case, it would have been 20, I think, yeah. So this is a concept that we have just blatantly copied from SAP, and I think it's a good practice to do it like that. And then the backdating feature, like I just explained it earlier, there will always be a situation where costing relevant documents need to be recorded, before the current date. So, which then impacts the cost at the previous date, but also what comes after. So there will be adjustment postings needed. So this slide explains that. So who is benefiting here? Okay, so first of all, you need to be someone who uses average PO costing. Yeah? In iDempiere we call it average PO. in a more general term, we call it average costing, but in iDempiere, we call it average PO. You also need to use iDempiere release 11 or 12. So you will get all the features in 12, but one feature only in 11. So the stock coverage is in 11, I think, and the backdated function at the account date is from 12. Yeah. So we worked first on the stock coverage ticket, and then we worked on the backdating ticket. And then, of course, it only affects you if you're incurring costs which impact your inventory, and these are three types of costs. Landed costs, right? So if you, for example, import goods from abroad and you incur import taxes, freight charges, insurance, warehousing, and so forth, right? So if you're an importer, you will typically have these kinds of costs. But there's also other scenarios. One scenario is where you have invoice price variations. So even if you operate only in local currency, your PO is in local currency. Let's say you're a European company, your PO is in euro, right? But you then incur an invoice price variance between the PO. This variance needs to be allocated according to the same principles. What is on stock should go to stock, and what is already gone should go into the P&L. And the third use case are currency variances. So for example, if I'm a Thailand company, we purchase something in Europe. When we do the material receipt in May, I get a certain rate from euro to Thai baht. If I get the invoice in June, I will have a different exchange rate between euro and Thai baht, so the system will generate a currency variance, right? And the system has to check again, how should that be allocated, right? Should it go into inventory, or should it go into the P&L? So these are the scenarios, and if you fall into any of these categories, you're benefiting from that solution. So we have embarked on the journey of improving, but we are by no means finished yet. Because there are other improvements that we are looking at. The first improvement here is planned landed costs. So planned landed, look at this.
You don't need to.
Oh, it comes back. Okay.
You're not following
It's out.
So what are planned landed costs? I'm not sure if you have ever seen, if you go to a purchase order, you have the header, and then you have the product lines, line 10, 20, 30. And inside the line, you have another sub-tab called estimated landed cost, right? So that allows you to plan for the landed costs. If you have a very good planning structure, you can put it in there. And the benefit is that when you do the material receipt, it will consider these estimates and update your inventory straight away with your estimated cost. And then if there is any differences for whatever reason in your landed cost, the system will write it off. So that's a pretty nice feature, but right now you can only do that in the PO currency. And I think that's not enough, because if you purchase something in euros, like we are importing from Germany into Asia, into Thailand, so the product PO will of course be in euro, right? But my landed costs are not in euro, they are mostly in Thai baht because it's import duty and stuff. So I should be able to plan these costs in my local currency, which is Thai baht, correct? So this would be an improvement that we need to work on, that in this sub-tab, we can plan in a currency other than the currency in the PO, yeah? There is another improvement that we need. What I'm going to show here later is a simulation in my test system, what I call landed cost allocation based on cost. So the landed cost will be allocated based on the cost of the product, right? But sometimes we allocate landed costs on the basis of product. So people know, right, that for this product we paid more import duty than for this one, right? So they want to allocate it very specifically to a product. So if we want to do that stock coverage check again, we need to have a quantity in this window where we do the allocation in order for the system to do the stock coverage check. So these are just two more of these things, but there are also other things I haven't put here. For example, if a product, I'm sure you have experienced this, if a product quantity is 0, you have nothing on stock, but you go to your GL, you run a trial balance, and you put in that product code, you might have some cents left or a few dollars or whatever. It should be there, right? It should be 0, right? Because it's all gone, right? So this is another, these are rounding differences, and in the end, when something is 0, it should be gone. So this is another thing we will be working on in future. Okay, so this would be my simulation here. So, you know, this costing topic, you can probably talk for days on end because it's such a complex discussion. There are so many scenarios, and this is just really an example I picked out here. So I have a PO with 2 products. One is called Buddha, the other one is Pest. And just to make it more easy to remember, and we order a quantity of 10 each, but they have a different price. So one has a price of 2,000, the other one has a price of 1,000. So there is a difference in the weight. I call it the amount of weight of these 2. That PO is already prepared in the system, and what I want to show you here is we receive the goods in inventory, so I do an MR, then I do a product invoice from the supplier, and the product invoice will have exactly these amounts, so I don't have any invoice price variations in this case here. But then what happens is a customer places an order, and we are selling 5 of these, so half of them each, and we are recording our cost of goods sold, and we issue an invoice to the customer. I prepare already a sales order there. Then I receive my landed cost invoice, so my import duty or whatever it was that caused me additional expenses to bring in the products into the country. And then I want to allocate it to, based on this material receipt here, but under the assumption now that 5 or half of the quantity is already gone. So the system should correctly say that, okay, 5 already not there anymore, right? So it needs to go into the P&L, whereas the other 5 goes into inventory, right? So this is what I plan to show you in the system, so you get an idea of where these improvements become visible. Now I need to get access to my VPN, otherwise let me put this down. I think I don't need it now because I'm going to use it later. Please give me your connection. No. What happened here? Why? I really need my system.
Disconnected.
But it's not giving me the connected icon yet. Damn. Technical issues. Disconnect. Got it. All right. Ready to go. Ready to show. So I go into my test. iDempiere 12. So we upgraded after fixing 200 merge conflicts. It was a lot this time, but we made it. I log in as administrator. Let's first examine, can you hear me behind? Let's examine first our purchase order. Just to understand what's happening here from a process point of view. Okay, so I have a PO here in local currency, which is Thai baht, coming from Thailand, and there are two PO lines. First one is a product called Buddha, quantity of 10, like shown before, and then 2,000 here, and then the second line here, also quantity of 10 and shown with an amount of 10, okay? So when I do a material receipt now, this is very straightforward. Create a new material receipt. So we do that in May, that's fine. I need to know my business partner, that was New Hampshire. There's an import number here, which is a customized field in Thailand. You won't see that. So here we have tools, create lines from, then we put in the PO here, and we should be good. So we receive all the goods without any partial deliveries. Okay, and then we complete this here. Okay, the next thing that happens is we receive the supplier invoice without invoice price variances. So we have 1,000 and 2,000 like what we had before. So I want to keep things very simple in this demo here. Okay, so purchase invoice, right? Why didn't we call it vendor invoice? Bigger, sorry. Yep, will be done. Better? One more? Okay. I make this a bit smaller here. So we have our supplier here. So this is a customized field, maybe just for the ones wondering. There's a field called profit center. And I borrowed that concept also from SAP because SAP works with profit centers. A profit center is like a company inside a company, like a business unit or a business area to split your financial statements internally by profit center. And this we are using the user one ID for that purpose here. And also there's some checks behind that. When I say this is for this profit center, I will only find purchase orders which were created for that profit center. So you cannot mix and match different invoices and different purchase orders. Okay. So let's do the invoice, create lines from. So there's no surprises here yet. This is just preparation work. So we have in the lines now 2,000, 1,000, 10 each. Document action. Complete. And now we need to do a shipment to the customer. I already prepared the sales order. And we will be shipping 5 out. Yeah? So there's only 5 on stock now. So if I were to check now on this PO line here, let's go to 1 first. We see that right now in our stock we have 10, okay, 10 here, and then the other product is also 10. I don't need to go there to show that. So this one was posted. Now let's do a delivery real quick. Generate shipments. So we put in here an organization, which is this. We put in here the warehouse, which was this one. And we say refresh.
I'm confused because
Any other question?
the window say purchase, but you are trying to do a shipment. So
Yeah, so these are two processes, a purchase, a material receipt, and a vendor invoice, which gives me 10 pieces on stock at values of 1,000 and 2,000 for these 2 products. And I also already prepared a sales order
okay.
for which I then do a shipment.
Okay.
So I reduce the stock quantity from 10 to 5. Yeah.
Okay.
So there's already an order here. Ah, that's why. I forgot to complete the sales order in my preparation work. So now, after this is complete, I should be able to make a shipment. See if something comes up. Okay, there we go. So let me see. This would be 10. Sorry, I need to do it in a different way, I think. Just want to check here what is the quantity that was ordered. I don't want to make any mistake. Okay, 5. It's all right. So I was on the right track. Okay, so now we do this, general shipment, which should then bring our stock quantities to 5, correct? Agree? bit slow. VPN.
Wireless.
Okay, so we have a shipment. I think everybody knows how a shipment is booked. We basically credit our inventory and we debit our cost of goods sold. So okay, let's look at our posting. So we go into my type art schema. We have multiple schemas, also US dollar schema, and we see here that our inventories are credited and our cost of goods sold is debited. And if we look at our product and we look at our quantities, we now see that the on-hand quantity is 5. Okay, now comes the real thing. So we are going to do some landed costing here. So I had 10, I purchased 10, 10 were on stock, I sold 5, 5 are on stock. Now I get my landed invoice after I already sold some products, right? So I'm going to demonstrate what the system is doing now. We create another purchase invoice. And record the landed costs. So the landed costs goes to a supplier called customs department. I save this and I create a new invoice line, and this time I'm choosing an expense account for import tax. So this is where is it? Import duty, sorry. So we are using charges for that. So the charges are linked to GL expense accounts. So you could also use a service product if you want, but we are using charges for that. And I am putting in here an amount of 1,000, yeah? So this was, I think, what we wrote in the instructions here, 1,000 of unplanned landed costs, yeah? Unplanned landed costs. So we save that here. And now I'm going to take my material receipt from before, which is this one. I copied that document number because now in my allocation, in my landed cost allocation, I will refer to that material receipt where we received 10 for both of these products, right? So I am saying that this is a cost-based allocation. So the system will take the product invoice costs to determine how to allocate these landed costs, right? So the higher the cost of the product, the more allocation they get for these landed costs, right? And I'm putting in my receipt here, and then I'm saying distribute costs. And then the system will show me here under landed cost allocation. There are two records, how the system allocates this 1,000 baht, 666.67 to this one, right? That's 10 times, quantity 10 times 2,000. This is quantity 10 times 1,000 is 10,000. So the system correctly allocates it by weight, by costing weight, right? But this is the initial calculation how how much every product should get, right, in terms of allocation. But the real trick is now that because we have sold already 5 of these 10, that the landed cost portion for 50% basically doesn't go back into inventory, it goes back into the P&L, right? And this is something I try to prove here now by posting this invoice. Am I over?
We were over. Before we started.
Okay, so let's look at this. So this is my US dollar schema. I'm looking at my Thai baht schema. And we can see here very clearly that a portion of the landed costs goes into product inventory, right? Like this and this. And the other half goes into average cost variance. And what that means is that the system now has put the right amount, the right portion of the landed cost based on the remaining quantity on stock. Because if it hadn't done that, my cost would be overstated, right? Because 5 were already sold. And if I had put the allocation of 10 into the remaining quantity of 5, I would have a problem, right? And my cost basis would be distorted. So, this is how it works with stock coverage, right? And this is, as I said, this is a very simple, only really a simple example. This works for many other scenarios, but I think it's an important improvement that was made there. Yeah, so that's it. If you have any questions, yes? Yeah.
Come here. The another specialist for costing.
Yes.
Long discussion starting.
Actually, I did with Norbert this costing calculation, and our use case quite often is that, let's say, I did the first sale of these 5 pieces. Then Norbert is selecting cost allocation, and Norbert is doing another 5 sale of the pieces, the rest. His profitability will be lower than my profitability.
So you say you sold 5. You
Yeah,
had
I sold
10.
5 before the lending costing.
Yes.
My profitability will be like.
Correct. Yes, correct.
And his profitability, he will never accept that he is lower profitability than I.
That is true.
He's a better seller.
Yeah.
And
So
therefore we did not a good solution, but we did a solution that we are deleting all the transactions,
Yeah,
all
so-
the accounting, and we are rebuilding it from the beginning.
So this is how SAP does it, and I think it's working quite well, right? So it's a good compromise solution. Of course, you can then also take it to the next level, right? But I think that this solution is perfectly adequate compared to what we are doing now, which is where the costs are completely off, right? Because if I sell 99 from 100, I have only 1 left. This is the next best thing, I would say, right?
You mentioned in the case number 2 that you have some
Backdated.
backdated transactions.
Yeah.
And these backdated transactions, there are some this document how we call it
Adjustments.
adjustments.
Yes, correct.
Okay, because some other systems are doing like this, that they do this invoice price variance, they do adjustment document, that they do accounting date of the current date, so they don't change accounting backwards, but they do lines like they follow all the process of the transactions of the product backwards, and they just match the receipt, sale, previous sold, and they split all the price variance to the particular
Yeah, so
transactions.
the way backdating works is based on account date now. It looks what happened after that, and I also discussed this solution with Elaine and with Heng Sin, and we agreed that the best thing to do that is to look what comes after, and make adjustment postings of where adjustment. So, for example, you sold 5 pieces, and you received a landed cost invoice. That means your cost base was too low for the first 5 pieces. The system will make an adjustment posting for the landed cost for these 5. So it looks at all these things that come after and makes adjustment postings.
Okay,
to
so
it.
this will show at the end that my profitability is the same as number. Yes?
Yeah, well, yes, because you have the product dimension there as well. Yeah, and then you can see that there was an adjustment posting, right? And then you can see it in your profitability as well.
So all invoice price variances I can
Invoice price variances, not only invoice price, but also landed costs
landed costing,
and currency.
yes, but I mean these landed costing that are already for the sold products that are not part of the inventory at this moment, so I can do these cost adjustments.
Yes, there will be basically a fact act entry, a general ledger entry,
Okay.
which adjusts these postings. And I have asked also Elaine and Hengsin to retain the original posting so that we have an audit trail. We see what the original posting was, and we see what is the adjustment that came after that.
I like compromise solution.
Huh?
I like the compromise solution.
Yeah, I mean,
that's important.
yeah. So because we saw this, I mean, these are really big problems, right? And I think there are more improvements that we can make, but I think this is a really, really good first step. But, there is one warning, although I have to give you all a warning, a word of warning on this. Now, when you deploy iDempiere 11 and iDempiere 12, these things will be active, right? So costing will be done in a different way. And what that means is you will have a bit of an issue with your history, right? So you have your historic costing transactions, which were somewhat distorted, and now comes a correct way of doing things. So you are basically mixing up, you know, the correct way of doing things with the wrong way of doing things, and creating maybe an even a more messy situation, right? I was talking to Hengsin about that. If you should give users the ability to do a system configuration flag or something to say, okay, I want to opt in or I don't want to opt in. But he said, no, we should just go ahead and, you know, make it correct. I mean, it will always be correct once your quantity is 0, right? And if you buy more, then it will pick up, everything will be right. But before it's 0, you will have a mix there.
So the break, so just quickly. So if you want to migrate, then we need to make 0 or on full inventory and start it again. No.
Well, that will be one option you can use.
Here, just want to clarify. There is a backward compatibility, means whatever is posted with the old method, if you repost it, okay, then still system respect it because it consider the cost detail value, and if it's found that it is there was enough stock coverage at that time, correct, or it is like because, for example, I know this code because initially we worked on this part, but we gave up once a landed cost came because we don't feel comfortable with landed costing. We are not work too much. So in average costing, like when invoice price variance comes up to date, we have work, and then we hand over to Hengsin, and Elaine started working on that. So what we have done is like there was big discussion even making system configurable, but Hengsin's idea is that if it is wrong, then it should not be configurable. The current costing method was means what we agreed that the current calculation was wrong. It is a bug, big bug, correct? So instead of making configurable, it should work as a new way only. Okay, then what we have think like what may be the post, how the accounting may be corrupted. If you are reposting a record, correct, then it may be change your accounting.
Yeah, but that is not an option because you already have audited, year-end results. So these numbers are frozen. You cannot go back and repost them. So you need to live with 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 the imperfections in the history,
Yes.
and you do start doing the right thing now.
Yeah.
But yeah, there might be some explaining that you have to do to the auditors, because you're changing the way the system behaves in different fiscal years, and they might have questions. But I think that's the only way forward, right? We gotta fix it, and there is no way we
Yes.
can't go on with a wrong situation and just not do it. I think it's still the best way.
And one of our implementations, it was like a big issue, because the earlier bug was actually corrupting the inventory value report. Okay, so whenever you get the invoices later, correct? We are not using landed cost much, but our example was like when I entered the purchase order, I entered the one rate, but invoice got with another rate, and meanwhile I have seat. Okay, so that was correcting my cost. So sometimes what happened, like I purchased it $100, okay, and variation comes as $102, but my cost value become like $500, and then my inventory value report say that it's like something big amount. I have seen sometimes like in millions, okay. So because even you are trying to recalculate backdated report inventory value, correct? The cost will be taken as a current one, and because inventory valuation report don't consider the previous cost history, and then backdated inventory valuation reports comes as quite high, and it's always questionable by customer. So what we have done, when we have rolled out this solution, what we have done, we are using, by the way, the ASI level costing. So what we have done, we have deleted all the cost and rebuilt the cost. So resetting accounts, delete all the cost details, reset account, and let it build all the cost, and then we get our balance sheets and inventory valuation report exact matching.
So what I would like to ask everyone here who is affected by this, please take a good look at these Jira tickets. There's a lot of documentation here from Elaine also, instructions and guidelines. For example, for backdating, there is a configuration setting. How many days you allow to backdate a particular document. It's in the accounting schema, right? So these documents, they explain all the functions. And if you can all take a look, we did a lot of testing on this, yeah? But the more people test, the more we will succeed in this. And we found a few issues in the most recent update, and Elaine is now working on fixing that. But if we all look at these things and start testing, then that will be very helpful, because then we get a more stable function there.
There is a way to recalculate all the cost.
No, not really. It will only do it based on the backdated days configuration, right? So if you allow, for example, 999 days, it will allow you to go back that far, and then the system will recalculate the cost from then. But it will not recalculate the cost to all the way from the beginning of time in your ERP system. It's not going to do that.
No, it depends, like if you are using the ASI level costing, correct, then it's quite easy, because for particular ASI which is created after some period, you can clear out the cost details and cost. And
correct, but we don't use ASI, we use organization level costing.
Yeah,
so
in that
it's
case it's not
yeah.
possible.
Yeah.
Before this, with Michal, maybe 10 years, we start work at the beginning in iDempiere on recalculating of full history. But still, it is not simple and easy topic, and would be better to have from my perspective, to have a compromise and do this well. And maybe Michal has more requirement on that, and more adjusted or exactly.
I mean, you can pick up on these tickets that we have in there. I'm just saying, for us, I mean, fiscal years that are closed, you can no longer change the accounting records. That's just not possible. In no jurisdiction are you allowed to do that. Right. Okay, so you cannot go back to 24 and say, oh, I want to recalculate my cost. The auditors will step in.
So, okay. New use case, negative quantities. In the flower business, the people are crazy, I think. They are sell anything like one flower or, and we have
Negative quantities.
because they have a boss, and they haven't time to make kids or so they many times in a negative status. They have a negative balance, and how is this can be handled with new changes?
Correct. So, for example, if I remember correctly now, so if you, let's say you have a quantity of 10, you purchase a quantity of 10, and then you sell 10, so you have now 0. For example, it's no longer possible to go back and do a reverse correct of the original value you received, because the system will say you don't have enough stock coverage there. So I think this is the default behavior now that is being done. And this is correct. You cannot reverse anything that has already been sold, right? So I think that's a pragmatic solution, right?
It can go to negative, it can handle this negative states or not?
No, because the system will not allow a reverse correct of something you don't have in stock anymore. It's the stock coverage check.
Stock coverage actually handle negative value. So if it's found that it is below 0, then it will not give means in the logic it is written like that negative quantity, then it do not pass to the P&L. Right? It's considered as a 0 only, not the negative. Because example here is like what happen when you are not actually have your warehouse as in allow negative
okay.
whenever.
Yeah.
Okay, then what happen? Users making mistakes, correct, and they are overselling because they are punching the wrong product.
Yeah.
Or like that, and it's
They are
selling.
So
selling full weekend for negative quantity.
Yes.
Yeah, so you,
Much more easier situation.
yeah, so you have to test that. So you have to go and check. For us, we don't allow negative inventory. It's not allowed. So for us, the error message, there will be an error message if you try to do a reverse correct of an MR for which you don't have enough stock, right? It will be possible if there's still enough stock left, but not if you have no stock. So, but if you allow negative inventory, you gotta go back and check that, yeah, how the system behaves. I don't know off the top of my head. Maybe it supports your requirement. That's why I think it's important that you revisit these tickets and and you do a little bit of testing yourself, right? How the system behaves here in for your scenarios. Yeah, but I think it's a major step, and as I said, there's more work to be done. We are not finished yet. Like for example, the inventory balance is left when the quantity is 0. We need to resolve these issues as well, right? Because every time the quantity is 0, you still have some balance sheet entries, crazy, right? So we have to work on these things as well. But yeah, good first step, but we need your inputs, yeah? As the more the merrier.
we need time because we haven't time.
So whenever we are migrating to the new system, there is one solution is like cost adjustment if you found like a cost is corrupted.
Yeah.
Correct. But the accounting dimension, addition of the accounting dimension features that we have worked, we have added ASI as an additional accounting dimension for this purpose only, because we do lots of ASI level costing, correct, and whenever it comes to the auditing part, correct, we have always scrutinized like how we can justify that my inventory valuation report is correct.
Why do you do ASI, if I may ask, costing? Is it because you do FIFO or something like that, or?
Not a FIFO, we say actual costing. So each each item should have an actual cost, correct? So that's why we use, we also describe like we support actual costing in this way. So we don't say as a average PO cost, we say actual cost, correct? And actual cost is per ASI basis. So we are dealing in pharmaceutical industry where it is a batch manufacturing, correct? So every batch has a ASI.
Right.
Even for example, we have implemented similar approach for
yeah, so in process industries you usually have a batch number, right? And that is your ASI key. Okay.
And in case of like even also we have implemented that, but we didn't. What we have created a concept is like UR number. So every time every UR state generate ASI. So ASI should be always there, correct? So every inward have as a ASI, and that's how you can link your inventory with the inwards, and you can associate the cost with it.
Yeah. So yeah, unfortunately, for us, we are doing, we don't do ASI at all. We do ASI, but we don't do ASI costing. We are doing costing on organization level. Yeah. So for us, maybe we are going to make, these temporary adjustment postings, and then we start slowly reversing them back over time. You know what I mean? So we can flatten the impact of that change.
I got recently an email complaining about costing from customer.
Yeah. Okay, thank you everyone.